Imagine a future where investing in the booming world of cryptocurrencies is as easy as buying a stock on the New York Stock Exchange. Well, that future is closer than you think. VanEck and 21 Shares have just filed for Solana ETFs, potentially revolutionizing how we invest in digital assets. Stay tuned to learn why this move could be a game changer for the crypto market and how it could impact your investments. Exchange-Traded Funds, or ETFs for short, are baskets of investments that trade on the stock exchanges like a regular stock. They can hold a variety of assets like stocks, bonds, or even commodities. So instead of buying individual shares of multiple companies, you can buy one share of an ETF that tracks a specific market sector or index. This allows for diversification and potentially lower investment costs. Now that we know what ETFs are, let's get back to the exciting news. VanEck and 21 Shares have submitted applications with the Chicago Board Options Exchange to list Solana Exchange-Traded Funds. These include the VanEck Solana Trust and the 21 Share Core Solana ETF. Rob Morocco, Global Head of ETP Listings at CBOE, emphasized the increasing investor interest in Solana, the third most actively traded cryptocurrency after Bitcoin and Ethereum. These ETFs aim to capitalize on this growing interest by providing a regulated investment vehicle for Solana. The timing of these filings is particularly strategic, aligning with the upcoming U.S. presidential election in November 2024. The SEC has 240 days to make a decision on the filings, placing the deadline in the mid-March 2025. The outcome of the presidential election could significantly influence the regulatory environment for cryptocurrencies. James Seyfarth, an ETF research analyst at Bloomberg, describes the filings as a bet on a potential victory by Donald Trump, who has expressed strong support for cryptocurrencies. Trump's administration is perceived as more likely to favor the approval of such financial products compared to the current administration. Should President Biden be re-elected, the issuers may face more stringent regulatory scrutiny, particularly due to the SEC's requirement for a regulated futures market for the underlying asset, a requirement that Solana currently does not meet. What do you think about the influence of politics on crypto regulations? Drop your thoughts in the comments below. Despite the potential regulatory hurdles, VanEck remains optimistic. Matthew, the head of digital assets research at VanEck, believes that the SEC's previous approval of Ethereum ETFs has softened its stance towards proof-of-stake cryptocurrencies, potentially paving the way for Solana ETFs. Additionally, VanEck is preparing a legal case to argue against the necessity of a regulated futures market for Solana, which could be a critical factor if the current regulatory framework remains unchanged under a Biden administration. The process of constructing a legal argument against the requirement for a regulated futures market is complex and involves significant resources. VanEck is reportedly investing millions of dollars in legal fees to ensure a robust case. This demonstrates the high stakes and the company's commitment to achieving approval for the Solana ETF. Solana has gained immense popularity due to its low transaction fees, high transaction speeds, and ease of use. These features have made it a preferred platform for decentralized finance applications and non-fungible tokens. The approval of Solana ETFs could further boost its adoption and development. The potential approval of Solana ETFs comes at a time when the cryptocurrency industry is experiencing rapid growth and increasing mainstream acceptance. The introduction of regulated investment products like ETFs is seen as a critical step in integrating cryptocurrencies into the broader financial system. This not only provides a new avenue for the investment, but also brings a level of legitimacy and regulatory oversight that can attract more conservative investors. The success of Bitcoin's ETFs has already demonstrated the potential impact of such products. The market response to Bitcoin ETFs has been overwhelmingly positive, leading to significant inflows of capital and increased market activity. A similar response is anticipated for Solana ETFs, which could drive further growth and development in the Solana ecosystem. If you are excited in the future of crypto ETFs, hit that like button and subscribe for more updates. The filings by VanEck and 21 shares for Solana ETFs represent a bold move in the evolving landscape of cryptocurrency regulation. While the approval process faces significant challenges, particularly under the current SEC administration, the strategic timing of the filings indicates a calculated bet on a potentially favorable regulatory shift post-election. Regardless of the election outcome, the applications underscore the growing interest and confidence in Solana as a major player in the cryptocurrency market. As the industry continues to mature, the introduction of regulated investment products like ETFs will play a crucial role in bridging the gap between traditional finance and the burgeoning world of digital assets. The approval of Solana ETFs would mark another significant milestone in this ongoing journey, potentially unlocking new opportunities for investors and driving further innovation within the cryptocurrency space. What are your predictions for the future of crypto ETFs? Let us know in the comments below, and don't forget to subscribe for more insights and updates on the latest in the world of finance and crypto. Stay safe. Thanks for watching.